Meet two people, same age, both 35. Both started the same job on the same day 5 years ago. Person A is still on that grind, up at 5:30 a.m., packed on the MRT, 8 hours in a BPO cubicle, home by 9 p.m. Every peso de peligro, it's cup noodles and watching the clock until the next sahod drops. Person B started with the exact same salary, but person B had Diskarte. Every single month, a slice of that paycheck went straight into investments. No fanfare, no flexing on Instagram, just quiet, consistent action. And now, person B wakes up at 8 a.m., brews coffee from Palengke Beans, not the 150 peso Starbucks kind, opens their phone and watches money land in their account while they were sleeping. Passive, automatic. One number separates these two people, just one. How much money you need sitting in investments before you never have to show up for work again, living purely off dividends, right here in the Philippines. Walang bula, katotohanan lang. That is what dividends can do, and this video is going to give you the exact peso numbers to make that happen. Every number in this video comes from 2026 PSA, BSP, and PSE data. Full sources are in the description. No hype, just math. Starting at the bottom is not giving up. Umangat tayo. We look at where most people actually are before we talk about where they are going. A single person renting a modest place, decent unit in the Quezon City suburbs, or a quiet spot in Davao can cover a basic but real life for roughly 67,000 pesos a month. That is around $1,000. Commutes happen by Jeep or UV Express. Groceries come from the wet market, and basic health insurance covers checkups at a private clinic. No beach vacation every month, but no stress counting sardines either. Stable, covered. Now here is where the math comes in. The government takes an automatic 10% cut from every dividend peso before it ever hits your account. That is not negotiable. So when you build a portfolio, you have to plan around that. Here is the one number to focus on. At a 6.2% per year return, which is a solid, realistic starting point for a dividend portfolio, you need roughly 12 million pesos invested to cover that 67,000 pesos monthly life. On screen, we will show how that number drops if you push the yield higher. All three scenarios will be in the visual below. You do not need to memorize all of them. Entry price for basic freedom in the Philippines, 12 million pesos at 6.2% yield. Most working Pinoys, OFWs, BPO employees, mid-level professionals are not chasing survival, and they are not chasing a penthouse. What they want is comfortable. In 2026, comfortable for a small family looks like this. Living within reach of a major city, driving a second-hand Vios that is actually yours, sending the kids to a decent private school, eating at Jollibee or a sit-down resto a couple of times a week, full health insurance for the whole family, 1 or 2 local trips a year, Boracay, maybe Palawan. That life runs around 112,000 pesos a month, about $2,000. To live that life purely off dividends, with the government's automatic 10% cut factored in, you need roughly 20 million pesos invested at a 6.2% return. Push the portfolio yield a bit and it drops. All the numbers will be on screen. For OFWs who have been kayad abroad for 5 to 10 years, 17 to 20 million pesos is not crazy, not easy, but a real number you can build a plan around. This section will slow your progress if you skip it, so we are not skipping it. The moment people find out you have ipon, or worse, that you are actively investing, the requests start coming. A cousin needs tuition, a sibling needs capital, your lola needs medical help. And since you are the mayaman one, every eye lands on you. That is utang na loob with a peso sign attached. Helping family is not the mistake. That is not who we are as Pinoys, and nobody here is saying stop. But every time you pull money out of your investment portfolio for a family emergency, the base never grows. You stay stuck in a loop. Kayod, give, and the exit never comes. The Diskarte is simple. Build a separate emergency ipon, 3 to 6 months of expenses kept in a regular savings account or a short-time deposit. That fund handles the family requests. Your investment portfolio, off limits, non-negotiable. Because that portfolio is how you take care of your family long-term, not just for the next crisis. Parang eroplano lang. Put on your own oxygen mask first. Some of you are genuinely targeting the upper end. Some just need to see the numbers to understand what not to chase. Either way, here is what premium looks like. A comfortable Metro Manila life. Condo in a good location, ride-hailing instead of owning a car, regular dining out, full healthcare, gym membership, reportedly runs about 150,000 pesos a month, or $2,500. At 6.2% return, that requires roughly 30 million pesos in the portfolio. Blend the yield up to 8.5% and it drops to about 22 million pesos. On screen, the full BGC baller life, 100,000 pesos rent, daily fine dining, private trainers, frequent travel. Estimates put that at 500,000 pesos a month. The capital needed for that runs into the hundreds of millions. That is a very different conversation. Here is a number that actually matters from this section. Every peso you trim from your monthly spending directly cuts down how much you need to build. The person living on 67,000 pesos a month needs less than half the portfolio of someone spending 150,000 pesos. That difference is not being kuripot. It is years of freedom that one person earns and the other gives away. You have the target numbers. The next question is where the money actually goes. Bucket 1, the safe base, Pag-IBIG MP2. The modified Pag-IBIG 2 savings program is the most underrated investment in the country. It is backed by the Philippine government, and the government does not take its automatic 10% cut from this one, 0%. Based on official Pag-IBIG fund data, it paid out 7.12% for 2025, reportedly the highest return in its 45-year history. Zero risk, tax-free income, government-backed. Start here. Put 35% to 50% of the portfolio into MP2. Bucket 2, REITs, property income without buying property. Real estate investment trusts are property companies listed on the stock exchange. By Philippine law, they must give at least 90% of their profits to investors every year. Not company policy, the actual law. That means regular, predictable income. 3 names stand out as of mid-2026. A-REIT, backed by Ayala Land, holds massive total rental space and paid out around 5.76% to 6.10% last year. RCR, the Robinsons Land REIT, absorbed 13 commercial malls in 2024 and is projecting around 7.60%. MREIT, Mega Roads office-focused REIT, is pointing to around 7.20% based on its first quarter 2026 dividend. Spread 35% to 45% of the portfolio across 2 or 3 of these, not just one. Bucket 3, blue chip dividend stocks. These are companies that have kept paying dividends through good years and bad years. PLDT paid out around 7.26% last year, Metrobank around 7.87%, Globe Telecom around 6.15%. Boring in the best possible way. Boring is exactly what you want when you're living off the income. For investors who are comfortable with more risk, Semirara Mining paid out around 12.60% as of mid-2026, but that number moves with global coal prices. Think of it like chili. A little works, too much burns everything. Keep it capped at 10% to 15% of the portfolio. Pull this together into a simple conservative blend. MP2 at 35%, AREIT and RCR at 45%, blue chip stocks at 20%, and the whole portfolio targets a gross return of roughly 6.85% per year. After the government's automatic 10% cut, your net return lands at around 6.38%. At that rate, generating the middle class 112,000 pesos a month requires about 17.8 million pesos in principal. Not the highest yield possible, but a portfolio you can hold through market swings without losing sleep. Living off dividends is not risk-free. Pretending otherwise would be doing you a disservice. Risk 1, when safe bonds start paying more. In April 2026, Metrobank Wealth Insights dropped their rating on top REITs to wait and see after a jump in government bond returns. When the safe, boring government bonds start paying more, investors pull money out of REITs, prices fall, and the value of what you own drops, even if the dividend checks keep coming. Risk 2, office buildings are struggling. After Philippine offshore gaming operators completely left and more people started working from home, office-only REITs took a hit. REITs that spread across malls, industrial spaces, and commercial land, like AREIT and RCR, held up much better. Spread is protection. Risk 3, prices go up, income stays flat. A cart of groceries that costs 1,000 pesos today will cost more in 5 years. If your dividend income stays the same while prices keep climbing, you quietly lose buying power every year. The answer is to focus on REITs and stocks that are actively adding new properties and tenants, companies that grow their dividends over time, not just maintain them. You don't start with 20 million pesos. You start with Diskarte. Nobody starts at the finish line. You do not need the full portfolio before it starts working for you. Every peso invested starts earning the day it goes in. The compounding starts immediately. The dividends start building before you even feel it. Think of it as a ladder. Right now, maybe the portfolio generates 5,000 pesos a month, pamasahe covered, some groceries handled. Then it becomes 15,000 pesos, then 30,000 pesos. At some point, if the consistency holds, the passive income gets so big that the decision of when to stop working belongs entirely to you. Registered financial planner Rando Chongson put it simply, making money is a skill, but keeping it is a behavior. Build the system, guard the principle, Let time handle the compounding. Which brings up the question most people ask next, and it is the right one to ask. Which specific businesses and side hustles can actually help you build that massive investment pot right now without needing millions in startup capital? That is exactly what the next video breaks down. The actual mga negosyong patok sa Philippines for 2026. We are going to look at the highest margin, low-risk business models that fit a standard Pinoy schedule, which industries are booming this year, and how to use that extra income to feed your dividend machine on autopilot. If you are serious about fast-tracking your timeline to freedom, hit subscribe right now so you don't miss it when it drops next week. We are already building the playbook. Kita-kita sa next video.